Hello, investor. Today I'm gonna introduce you 3 and testing dividend stocks. They have been provided dividends that are far greater than others. Because they're now paying even longer and bigger dividends. I'm talking about companies like Accenture, Starbucks, and McDonald's. Dividend-focused investing is a smart long-term investment strategy. Simply invest in high-quality stocks that offer reliable, steadily increasing dividends. You just collect them forever of your life. Moreover, share prices rise as a good business grows and becomes more profitable. Shareholders can expect to collect larger dividends as the profits increase. As your companies are doing well, you continue to get a bigger paycheck. It's like having access to endless cake. You can never get enough. These 3 dividend growth stocks just increased their dividends. Let's get started with the first one. Dividend increase stock number 1. Accenture, ACN. Accenture just increased their dividend by 10.2%. This is the 17th consecutive year in a row where dividend increases have been announced for this firm. Accenture is one of the largest IT services companies in the world. It pays a decent dividend of 1.1% but is lower than many other blue-chip tech stocks. However, Accenture arguably offers a much better balance of growth, value and income than its peers. Between fiscal 2010 and 2020, its revenue more than doubled from $21.6 billion to $44.3 billion. Over the same time period, net income rose steadily from $3.64 to $8.10 per share. Accelerate has been growing its top line by acquiring smaller IT companies and increasing its number of outsourced IT professionals worldwide. The business is well diversified across a wide range of industries, and it has been profiting from the company also funneled some of their cash flow toward dividends, giving them the ability to provide extra cash for investors. They also spend just 24% of their free cash flow on dividends over the past 12 months, which is a great opportunity for new shareholders. Accenture's stock rally in the past decade has been a huge piece of the total return puzzle. At today's price, it has generated a total 10-year return of about 660%. The company has been increasing its dividend payments and has not missed a payment in the last 17 years. One should also note that this increase is standard and can greatly improve your long-term return on investment. The company currently only has a 1.2% yield. However, you can view this as an opportunity to compound other aspects of your portfolio. And if you're an investor looking for dividends, it's exactly what you want. Meanwhile, the payout is protected by a low payout ratio of 43.4%. The stock is up almost 30% this year. It's $327 per share with price per earning of 32. Dividend increase stock number 2. Starbucks, SBUX. Starbucks just increased their dividend by 9%. Starbucks Corporation is an American coffee company and coffeehouse chain. Starbucks is the largest roaster and retailer of specialty coffee in the world. Headquartered in Seattle, Washington, Starbucks was founded in 1971. This stock has a really nice combination of potential. The 5-year dividend growth rate is 17.61% with 1.7% yield. This time is about 11th consecutive year increasing its dividends. The stock has been a huge winner over the years, rising more than 5-fold over the past decade. During that time, quarterly revenue and profit have skyrocketed 157% and 313%, respectively. And the store count has soared to a whopping 33,295 today. While the pandemic caused temporary store closures, subsequent reopenings have allowed the company to return to growth. Starbucks delivered record performance in the third quarter, demonstrating powerful momentum beyond recovery, CEO Kevin Johnson said in the company's latest earnings release. Because of those strong results, Starbucks is raising its outlook. For the full fiscal year, management now expects revenue to come in at about $29 billion, same-store sales to expand some 20%, and 1,100 net new store openings. Starbucks has in China. The coffee giant is opening 500 stores a year in China and is expanding in other markets in the region like Southeast Asia. Dividend increase stock number 3. McDonald's, MCD. McDonald's just increased their dividend by 7%. McDonald's is the world's largest chain of hamburger fast food restaurants, serving around 68 million customers daily in 120 countries. It generates revenues of around $20 billion annually. McDonald's Corporation operates and franchises McDonald's restaurants in the United States and internationally. Its restaurants offer various food products and beverages, as well as breakfast menu. As of December 31, 2020, the company operated 39,198 restaurants. McDonald's Corporation was founded in 1940 and is based in Chicago, Illinois. I love this stock, which is another world-class business and sizable dividend increase. It's like seeing the sun rise in the morning. That's how consistent dividend growth investing can be, and with billions of people all over the world enjoying this company. If you're looking for a good stock to invest in, keep an eye on this company. They have strong dividends set to increase like clockwork. It already proved. The quick service restaurant chain has now increased its dividend every year for 46 consecutive years. This dividend with the 5-year dividend growth rate, which stands at 7.9%. It also comes with a yield of 2.2%. Not bad at all. Even though the payout ratio is slightly elevated, standing at 60%, but this company's current payout ratio should still enable it to grow its dividend at a high single-digit pace in the coming in terms of covering the dividend. This dividend aristocrat is positioned very well. The stock has gone up by 15% this year, but given the company's strong and consistent performance in recent years, shares for McDonald's are trading at roughly $247 per share. Price per earning is about 27, even though it trades slightly above what I've pegged as fair value. In the end, paying a premium for a profitable business is never a bad idea. I hope you guys will be getting decent dividend in order to get financial freedom in the future. Thank you for following.